as we look at the year end here, we saw a surge in stock market numbers in the last few weeks. Gold went from just over $1,800 to hit $2,100 there briefly. A lot of things going on. And Nick Hopwood keeping an eye on all of it for us, of course, as we work our way through this end of the year. Nick, good to have you on the program.
Thanks for having me, Steve, and I hope you had a Merry Christmas, as well as all of your viewers and listeners.
I did. I really enjoyed it. I was out of the country. I hear you're going out of the country yourself for a few days now. Well earned, of course. But before people leave, you got to take into account what's happening. You're a certified financial planner. You created Peak Wealth, of course. So you've got some ideas on what people need to be looking at. Markets, year-end planning, New Year's goals, all of these things. Let's start with the markets. I mean, they've been on fire here lately, Nick. Really going up, setting all-time record highs several times. But can it really last?
Well, you're right. We are witnessing a really big run here since the end of October. Double-digit rally with stocks and bonds and commodities, as you mentioned. And so people are asking, is it a good time to buy? And for me, right, I think patience is a virtue. It seems like after you've had a big run like this, a little caution is warranted. Maybe it's time to hold tight and wait for the dip to add new money.
That's what I was actually concerned about. I mean, obviously, when you have a big run like this, there's always some sort of correction. There's always some sort of pullback, a dip or something more ominous sometimes. I mean, you can have a 10 or 20% pullback after something like this. It happens. I'm not saying it will, but I mean, when you put your finger on the pulse of the economy, Nick, what are you feeling?
Well, I think the economy is looking okay, right? We had a third quarter GDP, which was very strong. And in the fourth quarter, we're looking at, an average 2%, which is nothing to write home about, but it's not a recession either. So we're looking okay as far as the economy goes. But let's think about this for a second. As recent as Halloween, right, we had seen a big pullback, a double-digit correction, as you mentioned. And usually we see a correction every year on average. But guess what? People talk about buying the dip, but they don't do it because they're feeling nervous, they're a little scared, right? They want to see, they want to feel better. But usually the hard trades, or the best trades, are the hardest ones to make, and that's when you buy on the dip.
Yeah. All right, so it's a little late in the year. Here we are with only 3 or 4 days left, but year-end planning is important to make sure that you can get in as many expenses as you might have, maybe pay a bill now that is due in January so you can write it off this year, depending on where you are. But year-end planning is critical. A little late at the end, but you got a couple of days left to do a couple of things, don't you?
Yeah, like you said, right, you can pull some expenses forward. I love the small business entrepreneurial spirit there. Right now, with a couple days left, good luck getting an appointment with your CPA, though. So probably what I would steer you toward is your brokerage account, seeing if you can do a little tax loss harvesting here, to offset some gains or take a loss that you can write off on your taxes come April.
Yeah. Setting New Year goals. We do it every year. Actually, Ivan and I did pretty well in 2023 and the goals we set and then where we performed in different things. And that's in all aspects. But one of the things you say here is live your life by design, not by default. What do you mean by that?
Well, over 90% of us just wake up and go through the day and go through our life, and that's by default, right? But if you live your life by design, right, you're planning it out, you're mapping it out, you're going through the blueprint for your life like you would, like if you're building a house, right? You have your blueprints, and this is the foundation of our life, and it's writing down goals, 1 year, 3 year, 5, 10 year, the vision for your future, your personal mission statement, right? How many people do that? And I think the answer is almost nobody. But if you do these types of things, right, it's like the law of attraction. These goals will come true for you.
Yeah. Look, I think that's a great idea. Because most of us go out there and we react to what happens to us every day, right? We go out there and we react. You say don't react, make a plan. Go with a plan and be mindful of where we go. I think that's true of not just financial. I think that's true of all aspects of life, shouldn't it be?
Totally agree. Now, here's one big tip for 24, okay? take a look at your 401k. Make a call to your provider, whether it's Fidelity or Vanguard or someone else. Ask them, or maybe ask HR, do we have an after-tax contribution election? And so you can max out your 401k, depending on your age, $23,000 or $30,500. But look, if you have an after-tax opportunity, you could put in another maybe $20,000 or more on an after-tax basis. And the beauty here is, this is why we call it a mega backdoor Roth. You can then roll over the money out of your after-tax 401k into a Roth IRA. So if they offer a Roth 401, you can do 30 grand into the Roth. If they offer the after-tax, another 20 grand into the after-tax. And this is over $50,000 that you can get into a Roth. Steve, when they started the Roth, it was $2 grand per year.
So I'm just sitting here doing the money for people that can afford to do that. $50,000 in a Roth, which means that money, if you get in and the numbers do like they have done the past few weeks, your Roth explodes in size. You take the money out. There's no taxes, right?
Yeah, if you follow all the rules, it grows tax-free forever. I mean, this is a really important point because so many of our clients, we ask them, does your company offer a Roth 401? And they don't know. And we ask, can you do an after-tax contribution? And they don't know. So we have to help them do the research. And if you have this, if you can afford it and you have these options available to you, you must take advantage.
You must, not should, not could, no, must take advantage because, you know, if you want to retire. By the way, minute and a half left here. If you want to retire by 65, you got a couple of tips here for the folks that are less than 65, currently want to retire by then. Give me another tip for next year.
Yeah, we used to tell people it's hard to retire before 62 because that's the first opportunity for Social Security. But now we tell people it's hard to retire before 65 due to Medicare. So we have some clients who just retired age 61, and they have almost all of their money in their 401k or IRA, which is entirely pre-tax. And so when they make withdrawals to live, right, they're going to show a withdrawal and they're going to show income. As a result, they're ineligible, right, because they're too young for Medicare, and they're ineligible for an Obamacare subsidy. So as a result, they have to pay $2,500 a month for medical insurance plus a deductible. And so if you have Roth, if you have an after-tax brokerage account, you can manipulate your taxes to get that Obamacare subsidy, even though you have a big portfolio. So it's important that you don't contribute just to the pre-tax 401.
Good advice here at the end of the year. Plan. Make a plan and go with it. Don't just react every day. Have a plan going forward for your money, for your life. PeakWM.com if you want to find out more about what Nick's doing. He won't be available for a couple of days. He's going to be getting his tan on. PeakWM.com. Happy New Year, Nick. I hope you enjoy the sun and the fun on that little excursion you're taking.
Thank you, Steve. Happy New Year to you as well.
There you have it. PeakWM.com. Find out more. Have a plan. Don't live by accident. All right, we'll take a break and be back. This is the Steve Gruber Show.